What's up, traders? Chris Capri here, secondsguysforex.com. So I got a controversial video here for you today, and it's also going to be an incredibly informative and enlightening video at the same time. So many of you have already probably read or heard of my critique of Niall Fuller's trading competition and how he kind of glossed over certain facts. And the funny thing about it is that Niall had said that he was going to go over some of the trades he placed in the competition in a later article video. The funny thing about that is that never happened, and we now know why. And so recently, Niall's trading competition, the information at that about his actual trades and what he actually traded and how he traded it became available to me. So just to make sure, this is the competition, this was his return. His final balance is 23,52479, and here is the link to his FX Blue account, Million at Maverick, and same balance and everything like that, same equity curve. So just to verify that this is the real links to his actual account and his actual trading. So initially you think, oh wow, 300% return, that's pretty impressive. But once you actually start to dig into the details, a completely different picture emerges, and the numbers are absolutely horrifying. And when you look through all these numbers and look at all of his individual trades, you're going to come to one inevitable conclusion at the end of this video. And that is that Niall Fuller trades nothing like he says he does. In fact, it's the complete opposite. And there's a certain irony about it, because his most recent article talks about how you should trade one way, and he was trading the complete opposite of that. So we're going to get into that later. But the way this video is going to work is we're first going to go through every single trade so that you can see them all, and kind of just looking at all the trades will paint a very clear picture that this is not somebody who's a professional trader, someone who's trading with discipline. This is somebody who's trading very undisciplined, and just some of the risk to reward ratios that are inverted, or no stop losses or take profits. These are things that like beginning retail traders should do, or do, but no professional trader would ever do, and no professional trader should do. And once you're done looking at all these trades, you're going to come to that same conclusion. So we're going to first look at all the trades, then we're going to look at the risk analysis, and then we're going to kind of go over some of the other statistics in there. And ironically, you're going to come to another conclusion, that Niall Fuller isn't a set and forget trader, and that he's not somebody that is holding positions for long periods of time, or swing trading, or trading a few times a month. No, he's actively trading, and on top of it, he's a day trader. And that it's absolutely shocking once you start to look at this. So let's go ahead and get into the actual trades here. So here is a screenshot of the exact same thing. It's Million at Maverick, just to verify it. And what I ended up doing was to kind of clarify everything with visuals, is I kind of create a little legend here. So if you see a red box, that means that they're individual group trades. So they're traded mostly around the same time, a few minutes from each other, and maybe a few pips from each other. If it is a red circle, that means their trades had inverted risk to reward ratios. So an inverted risk to reward ratio means that your stop loss is greater than your take profit. And that is something you should absolutely never do. So in other words, if you were to have a 100 pip target, you have a 200 pip stop loss. This is something you should never, 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 never do. Never. And so you're going to find a lot of these. If you see a black circle, it means that there was an even risk to reward ratio, meaning that the stop loss was about the exact same size as the take profit. A green circle means a positive risk to reward ratio. So that means the target is greater than the stop loss, which is something that you should be doing, and that's something that all professionals are doing. If there is an orange circle, that means there is no stop loss and or take profit. So that's kind of how the legend goes. So let's go ahead and go over the individual trades here. So his first set of trades are on the dollar yen. And he opens them up at 1303, and so these two right here, these are boxed. I'm kind of grouping together because there's only a few pips difference, and they're only 7 minutes apart. His entry is at 113 roughly, and 112.95. His stop loss is over 300 pips away. Where's his target? 200 pips. So this is a completely inverted risk to reward ratio. Then on an earlier trade he had here, here's an earlier trade he had that was higher, 1386. This one had a 214 pip stop loss, and he had a 286 pip take profit there. So this one's actually somewhat balanced there. But then here's another set of groups of trades, dollar Singapore, all around 40-20, 40-30, 40-20. So I just kind of grouped them all together. But again, inverted risk to reward ratios. So here he has a 113 pip target, or 13 pip stop loss. His actual target is only 100 pips away. So completely inverted there. Same thing here. He has a 100 pip stop loss. And here he only has a, he actually ended up adjusting the take profit so that he could get out of the trade negative, basically. So you do the math on that one here. Here's a gold trade here where he has roughly a $1.35 stop loss, and he has a $3 take profit. So our first actual positive risk to reward ratio. And then in this trade here, there's no stop loss. This is something you should never do because you can never quantify your risk. That means your risk is technically unlimited. And he has what, 180 pip target, and he has no stop loss on this one here. So a total of what, 2 inverted, 2 normalized, and 1 with no stop loss. So here's the next one. Again, another dollar yen trade with no stop loss. Another gold trade, 12.18. Look at his stop loss on this one here, 13.20. So $102. Where's his target? He ended up lifting his target so that he could get out for a negative. Then he takes open 4 group trades on the Dow Jones, and none of them have a stop loss, and only 2 of them have a take profit. And so, yeah, that's all I can say about that one there. Here's another trade on the FTSE. He has about 175 point stop loss, and his target, he ended up raising it to the negative so he could get out early. Kiwi dollar, 2 trades, no stop loss or take profit. Aussie dollar entry, no stop loss or take profit. Now, these are all kind of, I made these separate trades here because they're different times. This is like 18 hours later. This is like another 10 hours later. And so if you look at this here, these are all buys. He has 93 pip targets on this one here, about 100 pip, 110 this one, but no stop loss whatsoever. Move down to a pound dollar, again, no stop loss or take profit. Another FTSE trade, and he gets in a 60-40. He has a 215 pip stop loss. What's his target? 100 pip points. Completely inverted. In fact, his stop loss is 2.5 times bigger than his target. Here he's in a pound yen trade, and he has a 200 pip stop loss and a 200 pip target, so this one's balanced. These two are just connected. This FTSE's connected to this one here, and this one's connected to this one here. Now he finally has some trades. It took him a while, but then he finally has some trades that he has balanced stop losses and take profit. So here he has, he moved his stop loss, or he has a 5.6 point stop loss, and he has a 34 point take profit. So finally something balanced here. Pound dollar, he has here a 20 point stop loss, and he has 72 pip take profit, and another balanced one here with relatively balanced here. It's about just a little over positive here. So a bunch of trades with no stop losses. In fact, he had 1, 2, 3, 4, 5, 6, 7 trades with no stop losses. 2 of them were inverted. 1 of them was balanced, and only 3 had actually balanced risk to reward ratios. Here's the third set of trades. These are actually part of his last crude oil trades that were balanced. And then here we are again. He has about a 50 pip or a 45 pip stop loss, and he ends up adjusting his target into the negative so he can get out early. Euro US dollar, he has about a 100 point stop loss, and he has a relatively break even or slightly negative take profit, so he adjusted that to get out early. This one is balanced. This one he has a, what is that, 300 and what, it's 280 plus 340 pip stop loss, and he ended up moving his target into the negative just to get out of the trade. Aussie Kiwi, he has a 240 pip stop loss, and he has a 140 pips target here. So a 2x stop loss in relationship to his target. Same thing here, relatively same thing here. I grouped these all as one trade. Another Aussie Kiwi trade, I didn't group it with this because it was 5 days later, and it's also a higher price, and he has a 279 pip stop loss and a 100 pip target. So 2.7, his stop loss is 2.7 times larger than his take profit. Here he has about a 385 pip stop loss, and he ended up moving his take profit into the negative just so he could get out of the trade. Three group trades on the Nasdaq. Here he has a 100 point stop loss, and he has a 25 point target. So a 4x. His stop loss is 4 times greater than his target. Pound dollar, he has a 580 point stop loss, and he has a 120 point target. I don't even know what to say about this. His stop loss is 5 times greater than his target. And here he has no stop loss, and he has only a take profit. So not one trade on this page here has a positive risk to reward ratio. He only has one neutral, and he has 1, 2, 3, 4, 5, 6, 7, 8, 9 inverted, and one with no stop loss. So you do the math on that. Okay, and this is the last page. This dollar yen is part of the prior page. He has a euro pound trade, 150 pip stop loss, 48 pip target. So his stop loss is 3 times larger than his take profit. This one is even. This one is he has a 125 pip stop loss, and he has a 75 pip take profit. So his stop loss is 2x. DAX trade here grouped. He has a 300 point stop loss, and he only has a 70 point target. So his stop loss is 4 times greater than his take profit, completely inverted. Nikkei trade, no stop loss or take profit, and then finally has a trade with a favorable risk to reward ratio. Now what that ends up coming out to is, while there are a total of 50 individual trades, when you start to group it all together, the real number of total trades was 35. And he had 19 total traded instruments. Now, out of 35 trades, the total number of inverted risk to reward ratio trades, 18. So in other words, 1 out of every 2 trades of his had completely inverted risk to reward ratios. I want you to think about that for a second. 51% of Niall Fuller's trades had upside down risk to reward ratios. Out of 35 trades, the total number of trades with no stop loss, no take profit, or both, 10. So in other words, 29% of Niall Fuller's trades had no stop loss, no take profit, or both. 1 in 3 chance. And then when we look at it a little bit further, total number of trades with even R to R ratio is 5. So only 14% of his trades had an even R to R ratio, meaning that the stop loss was the exact same as the take profit. Total number of trades with favorable risk to reward ratios, meaning that the take profit was greater than the stop loss, 3. So only 9% of his trades had a favorable risk to reward ratio. Now we're going to get into some other stats shortly, but those numbers alone should be horrifying to you. That means he trades nothing like he says in his articles there. In fact, when you start to go over some of these trades, what you start to realize is, look at some of these trades. He's talking, he enters at 9:48 and he's out 6 hours later, 8 hours later. He's in at 4:25, and this one he actually held for a few days. But look at this one here. He's in at 10:23, he's out an hour and 30 minutes later. He's in at 14:57, he's out roughly a day later. He's in at 10:23, he's out roughly a day later. So you're talking someone who is constantly managing their trades, not holding them to their stop loss or take profit, not letting them breathe. This isn't someone who's being disciplined or sticking to their trading plan. This is someone who's frantically getting out of trades with completely inverted risk to reward ratios. Someone who has no respect for risk management here. This is not a professional trader here. And there's something ironic about, because his most recent article was "Let the market take you out of your trade." In fact, he even says as a bold headliner, why you should almost never manually close your trades. And then he talks about, and he goes into a nice little recap here, and he says, look, here are the main takeaways from this. Good trades often take time to play out, often longer than usual want. Okay, if that's the case, then how come you close the majority of your trades early? He's saying here you should let your trades breathe by giving them wider stop losses than you may want. You didn't let your trades breathe at all. And so, there's complete contradiction here from what Niall Fuller says and what he actually does and what he actually did. And this is also interesting because, keep in mind, according to his own words from the actual competition, he was applying sophisticated money management. Sophisticated money management. So 51% of his trades had inverted risk to reward ratios, and somehow that's sophisticated money management. A bunch of his trades had no stop loss or take profit, and somehow that's sophisticated money management. He also further said about the competition, these are the exact same strategies I've been teaching to other traders. I'm not a day trader, which is interesting because when you start to look at the risk, where it actually shows the actual duration in terms of the trades, this black line is the 25-hour mark. The majority of trades are clustered inside a few hours, and over half of his trades are closed within inside 25 hours. So, Niall, you're saying you're not a day trader, but yet the majority of your trades were closed inside not only one day, but inside like half a day. You are a day trader. It's just complete fabrication here. Now, luckily, FX Blue has a good risk assessment where they analyzed all the trades in the competition. And so this is, again, Millionaire Maverick. This is his account. Now, this is where it starts to talk about risk of ruin. Niall Fuller's final risk of ruin was 53.2%. And what that basically means is that the chances of him losing 100% of his account was 53.2%. In other words, you could flip a coin, and on any given day, if Niall Fuller's trading that account, he has a 53% chance that that account's going to blow up. The entire account. He has a 53.2 chance his entire account is going to blow up. His single worst day was minus 40.1%. And when you start to look at the percent chance or the risk of ruin that he will lose 50% of his account, 73% chance that he will lose half of his entire account. This is absolutely horrible risk metrics. This is something no professional trader would be doing. And if you were trying to manage funds for somebody or applying to manage funds, if they were to see these stats, they would kick you out the door and they would never talk to you again. Yet somehow AxiTrader thought it was a great idea and said, yes, let's give that guy $1 million. He's the winner. These stats are fantastic. Let's invest in that guy. That really tells you something about AxiTrader for that matter. Now, also looking at his statistics here, so he had a total of 4 days with 10% losses or greater, which it shows right here. It measures this all in the risk statistics here. In fact, if you look, the majority of the days Niall Fuller is trading, he's losing money. If it weren't for just a few big wins and then a couple here, this account would have blown up completely. The majority of time, if Niall Fuller is trading and making trades, he's losing money. I want you to think about that. 4 trading days with 10% losses or more. Statistically, if you have 2 months of 10% losses, your chances of recovering that entire account fall to next to nothing. It's your chances go exponentially higher that you will not recover your account. Less than 7% of all accounts that have 2 months of 10% drawdowns or more will not recover their account. So less than 7% will actually recover it. 93+% will not. He's had 4 days with 10%. So again, absolutely horrible risk metrics here. So I've gone over all the trades, I've gone over the risk analysis, and I've kind of pointed out some of the stats. And just to kind of point this out a little bit more here, kind of go back to this here for a second. So 18 trades had an inverted risk to reward ratio. Only 3 had a favorable risk to reward ratio. That means Niall is 6 times more likely to have an inverted risk to reward ratio than he will have a trade with a favorable risk to reward ratio. 600% chance. 600%, 6 times greater. For every one he has a favorable risk to reward ratio, he's going to have 6 other that are inverted. He actually has a greater chance, a 3 times greater chance, that his trades will actually not have a stop loss, take profit, or both than he will produce an actual trade with a favorable risk to reward ratio. These are absolutely horrible statistics. These are not sophisticated money management strategies. This is not something a professional trader does. This is not somebody who shows discipline or a strong mindset or consistency in their trading. These are things that you would expect out of a retail trader who's been struggling for years and continually blowing up account, blowing up account, blowing up account. This should tell you very clearly. This should bring you to the same inevitable conclusion. that Niall Fuller does not trade the way he says he does at all. It's a complete farce. He says one thing, he trades another. And the proof is in the pudding. These are his trades. This is all the trades he ever took. There's no other inevitable conclusion on this one here. And so with that being said, I have 5 questions for Niall Fuller, and these are questions you should, if you're a student or thinking about becoming a student of his, these are questions you should be asking yourself. You should have an immense amount of questions here. In fact, you should be totally skeptical about Niall Fuller's trading. And anything he says he does, you should now know he doesn't do that at all. It's the complete opposite. So these are 5 questions that, came out of my mind, and maybe you have others yourself. But, the first one for me is one, you were calling these high quality trading opportunities when you talked about this in your competition. Case in point, you said it right here. Winning the competition was a balance of finding quality trading opportunities. Okay, so are you telling me that the majority of your trades with inverted risk reward ratios and closed out inside of a day, these are high quality trading opportunities? Is that what you're telling us? Because that doesn't make any sense. Also, second question, you call this sophisticated money management. Please explain to me how this is sophisticated money management, because this is something that an incredibly undisciplined retail trader on crack would do. There's no discipline here whatsoever, and there's no sophistication in it whatsoever. You had a total of 3 out of 35 trades that had positive risk reward ratios. The rest are all even, negative, most of them, or no stop loss or take profit. So is this what you call sophisticated money management? My third question is closing trades early in the negative what you call having the discipline not to trade, or as you letting the market take you out of your trade? Is that why you're saying why you should almost never manually close trades? Please explain the discrepancy here. Now, you also said these are the same strategies you teach to others. That's in this little statement right here. These are the exact same strategies I have been teaching to other traders. Okay, let me get this straight. You have been teaching to other traders to have inverted risk reward ratios, to not let the trades play out, to only have one for every positive risk to reward ratio trade you have 6 others that are inverted. Are your strategies really that, do they have that poor of entry, stop losses, and take profits? If these are the same strategies you teach your other traders, then your students should be highly concerned. If they're not, please explain the discrepancy there, because it doesn't make sense. It either is the strategies you teach to them, which would be an abomination, or it's not. You choose. And the last is where you talk about, you say, you're not a day trader. You said it right here. I am not a day trader. I'm more of a swing trader. So I only traded a handful of times during the competition, which is, you traded 35 times in a period of, 6 weeks? You were averaging about 1.15 trades a day. You're saying you're not a day trader, but when you average 1.15 trades a day, you're a day trader. And when over 51% of your trades are closed within a 24-hour period, and of those, of half of those, the majority of them are closed inside 12 hours, that makes you a day trader. So please explain the difference here. With that being said, I'm sure this video is going to be highly controversial. I'm sure it's going to irk some feathers of his fans, and I'm sure some other people are going to be like, yeah, that makes sense. We always thought that, and now we know it's true. The bottom line is that the evidence now speaks clearly for itself. These were your trades from the competition, which you were so eager to brag about. In fact, you were promoting your win in the competition as of 3 weeks ago. It was a year after it, and you were still promoting it. So this is something that you thought was some big achievement. But when you start to look at the numbers, I think everybody now knows why you never talked about these trades in a later article or video. Because the numbers are absolutely horrible. This doesn't show someone who's using sophisticated money management. This doesn't show someone who shows like discipline or confidence or patience or letting their trades take them out. anybody who looks at this should be coming to the inevitable conclusion that I did, which is that Niall Fuller trades nothing like he says he does. In fact, he trades the complete opposite. And so if anybody's even thinking about becoming a student or is a student, this should leave immense questions in your mind, because Niall Fuller's saying one thing and he's completely doing another thing. And keep in mind, he was so eager to brag about his 6-week trading competition. But when you look at these numbers, this is nothing to brag about. In fact, you had a 53% chance of blowing up your entire account. Flip a coin. I have students that show far more discipline than you, far better performance. They don't have one inverted risk to reward ratio trade, not one. These are people who are confident, who stick to their trading plan, who are patient, who do let their trades take them out. And these are my students, and they are not professional traders. Yet you call yourself a professional trader. Yet your trading says completely the opposite. So with that being said, I'm willing to bet there's going to be hundreds and hundreds of comments and questions on this. And I'm sure some of them are going to be favorable or positive or reinforcing, and I'm sure some of them are going to be casting fire and brimstone and telling me I'm this and this and that. The way we're going to relate to this is this, and it's very straightforward. If you want to leave a comment or question or a critique or anything like that, you're going to have to do so in either a positive or neutral tone. This is not a place for you to kind of vent your emotions or kind of just throw up on things, and you're going to have to talk facts and numbers here. You're going to have to talk facts and numbers. If you're going to say, hey, I disagree with you, and I disagree with you based on this, this, and this, and this, fine, do so with facts. But if you're just going to make speculative statements and you're just going to call names like happened on the last article that I wrote about Niall, then your comment's just not going to be approved, and it doesn't contribute to the discussion. We're all adults here. If you disagree with me, fine. I don't have any problems with you disagreeing with me. But do so as an adult. Do so with constructive criticism and saying, hey, I disagree with you based on this fact, and this fact. And do it with an open mind. I'm open about this. I'm willing to be wrong on this. The bottom line is the numbers show something different. And so if you are going to post a question or a comment or anything, it has to be in a positive or neutral tone. It has to be something that contributes to the discussion. If it doesn't, it's not going to be approved. And it's not because that you disagree with me. I have plenty of people that disagree with me all the time, and I approve their comments. This has nothing to do with that. It has to do with contributing to the discussion in an adult way, and it has to do with being mature about it and showing some constructive criticism. And so if you want to do that, fine. If not, don't even bother. It doesn't benefit you. It doesn't benefit you. It doesn't benefit me. It doesn't benefit the people who are watching this video and who probably have a lot of questions after this. And so with that being said, I look forward to your comments and questions on this, and I'm curious if you came to the same conclusion that I did, or if you came into a different conclusion. I'm totally okay with that. I want to know. But if you're going to do that, make sure you state facts as the basis for your conclusion, or evidence or something to the contrary. So with that being said, I will look forward to the discussion on this, which I'm sure is going to be very lively. I'm looking forward to your comments and questions, and I'll see you inside the next video.